Hello, everyone. Welcome to today's weekly update. There are a couple of things I want to say here for us to make the most of our trade. You all have read a whole lot about structure in terms of technical analysis, that you could have a trending market, either uptrend or downtrend, and consolidation. And that is what the support and the support and the resistance that you know about, and what wave and structure had introduced for us to have a better grip of the market, and the kind of trader you can be if you want to be a scalper, a day trader, a swing trader, and a position trader. I think one of the things, the best form of trader you can be, if you are into wave trading as well as wave and structures trading, it's to be into the swing and position trading. That's one of the best that you can be. And you can now learn how to fine-tune your trade if you want to walk around being a swing trader and a position trader. So leaving your trade for, a 1 week, 2 weeks, and to decide where you want to take your profit. Wave study and structure study, gives us a clearer perspective as to what is building and where we want to, execute a trade and where we want to exit, and how long do we think we want to leave this trade. It is not always good to, take the pain of trying to find an entry, and all you want to do is to exit quickly without having a knowledge of where the trade is going. And that is what I believe is very important for every one of us. Where is this thing going? In the immediate, in the intermediate, and the long time. I think for us to have most of the gain of our trade, I think where the trade is going in the intermediate and the long term is what we should be looking at. Otherwise, we'll be missing out. If it's immediate that you want to exit immediate, it can be quite draining for most trader, because one thing you cannot do, you cannot push trade, you cannot enforce it, and you have to understand the fractal nature of the trade. And so understanding it better, that's where wave theory and structure comes in, to understand the fractal nature and where you want to really exit completely, or you want to partially, open positions, or at what point you want to open multiple positions, and where you want to exit some positions, and all of that. So it's very, very important that we get this concept. Otherwise, you'll be missing out. When the market is trending, either uptrend or low trend, it's much easier for you to say, okay, you want to enter, at a retest, and you want to follow the trade. Most of the time, where the problem is when the market is in a consolidation phase, and that consolidation phase is a corrective phase. When the market is correcting, and it's going to give us at least a three wave, be it a flat or a zigzag. And that's where the challenge is, because you never can decide, you never can tell the market when the market is going to give you a complex trade, a complex correction, or a simple three-wave correction. So that is where the market is. So market may choose to do anything. So you don't know that for sure. So when we expect, okay, a much more deeper correction, the market gives a shallow correction. So we are still expecting the second leg, which is the seventh swing, to form, and the market reverse from there. So you'll be missing out. So, and again, that is why it's also very difficult for you if you want to counter trade, because you are counter trading, thinking at this level, market should give us a more complex correction, and the market reverses on you. So it's always very difficult to counter trade. What is most important is that, okay, if market is going to give you a correction, let it give the first correction. If it's in line, I will show you what I mean. If it's in line with your direction, you may just take a small position at that level, with the possibility that market may swing and give a complex correction. And if market is going to give a complex correction, all you can do is to decide if you're going to leave your trade or you are going to break even. And while market now gives a much deeper correction, you are going to join it again. That's all you can do. But counter trading, it's suicidal. Most of the time it's suicidal. So most people will lose money when you are trying to counter trade. I've been trading for quite a while now, managing my trade without losing that much and having most of the gain of the profit. So you think that, oh, one is patient. It's better to learn patience and to be, with this style of my trading, to be a swing and a position trader than a day trading. A day trading, you really have to be at it and be watching, because most traders and scalpers are caught with news. So if you are not, if you're a swing position traders, you most likely will not be affected by the news. Yeah, I'm talking too much, right? So let's go into it. Let's dive into the chart. We've had this swing to the downside, which is the first structure to the downside, and this second structure, which potentially could be a 1 and a 2, as we are going to the downside. And we may see this movement to the downside as, wave 3 that is still trying to unfold. And the way we are going, we have to begin to look at the microstructure and the major structure as it's being created, as to when market is trying to now change direction. So we have to know all of that. So if you look at this wave, this is a wave, a complete wave. When we say microstructure, this example here is a microstructure. This example here is another microstructure. I'm trying to show us what a microstructure is. And this example here is another microstructure. So we are seeing microstructures being developed along for us to have a complete structure here, which is a 1, 2, 3, 4, 5. Then this is a major structure. And this major structure is where we expect a much more complex correction. And if you don't get it, there's nothing we can do, because we would have expected that market will give us an 11 swing at least, or 7 swing at least, rather, for us to get a deeper pullback to join the trade. But market has given a shallow. Now, this is another microstructure here, another microstructure here. So if you look at this one, you will see in around this area on the much lower time frame, another microstructure. So, and we have had 1, 2, 3, 4, 5 again. So we look at 1, 2, 3, 4, 5 as it's as it's developing. And at the end of every 1, 2, 3, 4, 5, we have to look at the major correction that is going to occur. If it's going to occur in 3 or 7 swing. So we expected that this also is going to give us a much deeper correction. See, again, we have a shallow correction and the market is turned to the downside. So all you can do, when you are seeing corrections like this way, is to expect at least a 50 fib retracement, not 61.8, a 50. So if you join at a 50 and you try to continue to watch, of course, it's going to be a small lot size you're going to put at a 50 without relinquishing your position right from this top. Most of the time, I won't advise that you quickly close. If you close around this area because you're expecting a deeper correction, you will miss out. And by the time you are now joining in the middle, the market will go up and down, you are confused. Fear will grip you, you will lose out. So that you close negatively, and by the time market moves, oh, it's moving. So it's like you think you are not second guessing. So if you don't want to guess, when you gain an entry at a position like this, just leave it. Forget about the swap. Leave it and let it go. Let it go. Continue to, because you continue to now monitor the evolving weight and do your count on the micro and as well as the major, structure, until we are sure that, okay, we are reaching the end of wave 3, and that's all we can do. So this is breaking to the downside. So if you have lost to add positions here, you've lost another position to add here, except you have entered at a 50. So price had gone to this point. We know that with this price here, we are not going to, where price may have chosen to give us this, but the chance of the price giving us as A, B, C, will be remote with this kind of movement to the downside, because, what ended, if it's B, this B wave is kind of very, strong wave, which is like a 5 wave to the downside. So when your B is like a 5 wave to the downside, you have to be very careful that it's going to give you another C wave. It's unlikely, because even B in flats is not 3 waves. That is the thing that will guide you. B, most of the time, except in a zigzag, in fact, in a zigzag, B in a zigzag, it's not even in any of the wave, it's 3 waves. B is a 3 wave, not 5 waves. So when you see your B giving you like a 5-wave structure, forget, it's not correcting anymore. It's going to go. So yeah, if your A is 5 waves, that is when to expect that you're going to get a 3 and another 5 to the upside. That's all you can expect. But now here, we have seen that it broke down, with this momentum to the downside. It has created a 1 and a 2 and a 3, a 4, a 5. So when you see this push again, which is a big push to the upside, you will be thinking that, oh, price is going to give, a C to the upside. Then that is not going to happen. So it didn't happen. So it only gave you an opportunity to enter deep again to the downside. That's what happens there. So, and DXY may not have broken to the downside, but US dollar index had broken to the downside. So we are seeing it's more shallower and had broken to the downside. So the momentum has shifted and dollar is dropping. Dollar is dropping. So with that said, let's see what we can have in the coming week on euro dollar. I would always advise you not to, drop your position quickly, because to even get entry in the first place is not that easy, because you don't know what wave is going to develop into. But you are following it and you are counting the internal structure as it's going. For instance, I have trades here on euro dollar as low as this place. I'm still holding them. I'm still holding trades on this level. I have another one still holding at this level. I was not able to add here. I was not able to add so far, but I will still get opportunity to add. But I still have those ones running in fact, I had trades running for over 400 pips on euro dollar. So and we still have a long way to go. So that's the trick. At the end of the day, the swap will still, will be nothing when you are deeply in profit. Now, this trade has given us this, and this is a bigger correction, a much bigger correction, like a WX right to the downside, with the last C here, or Y here being truncated. So, and when they're going to truncate, you never can tell. So all you can do is to, get in at a particular level. So we've added this to the upside, a 5 to the upside. They add an A, B, and a very shallow C to the downside. And it's tall there. So when you see things like this, you may decide, can I come in at a 50? And if they decide to go up again and come down, it will be a bonus. And when you see a bonus, then that's when you had a bigger lot size, because you know that you are trending to the upside. And the same thing happened here. We had this 5 waves to the upside. We were to correct these 5 waves, and it is not a correction of the entire wave, because it won't make any sense to correct the entire wave, because this had corrected, this moved to the upside, and now we have another 5 waves to the upside, and this had corrected it, like just want a pullback to correct this at almost like a 50 or 6.8 or thereabouts, and the price is going up again. So this is going to break the top, and it will continue. So we are looking at the fractal nature of this. The only time you will expect a much bigger corrections. We will always tell you if we are going to, if the cycle, or the microwave has built up to a point that we're going to have a bigger 2 corrections, then we'll talk about it. But for now, it's still building up. All you can do is to look for a correction here, but not at this point. You don't want to buy at this point. It makes no sense to buy at this point, and you look for your sell later. So how do we engage this if we want to buy? Now, let me tell us something, that if this had gone up as a 5 wave and this one had corrected, the next wave is what we have to look at. Is it going up as a 5 wave? If it is going up as a 5 waves, then it's telling you price is moving higher. So you don't start thinking that this will now be an A, this will be a B, and this will be a C to the downside to break the low and go up more. So we have to look at, is this wave building in 5 waves? So if it's building in 5 waves, let it continue a cycle of 5 waves, on that micro level, and look for a pullback or a correction, at about 50 or 61.8, if it's going to give you that. That's all you can do. So we don't see price coming to take this low for now. Price shouldn't come and take this low if this is going to give us a 5 wave structure to the upside on euro dollar. So let's look at it on the 1 hour time frame. On the 1 hour time frame, are we seeing that? Now, on the 1 hour time frame, it's looking at, see if it's giving us a 5 wave structure to the upside. So this is the first move, and this is the second move to the downside. So a retracement here is about a 50. Then we add this move. It did as if it was going to give an A, B, C for more downside. So that was, how they can fool anybody. So they did at this point as if they did an A, B, C to the downside, and they're going to do an A, B, C at this point, and they're going to drag this to the downside to break the low. So everybody, you have expected that to happen, because you are expecting a much deeper correction, at least to correct from here to this point. And what did they do? Price went cold, dollar went cold and lost its mojo. So at the end of the day, it's now developing into a nest, because if you look at from this point here, from this low here to this high, this did just a 50 to the downside. So making this like a 1, 2, a 1, and a 2, and we are going into a 3. The third wave is still going, it's still building. So is this up to, is almost getting to the what is called the third wave now. So, but again, what will tell you that this is likely going to continue to go up, it's of what retracement, how much the retracement from here to here has this one done. Once it crosses beyond 76, then it's going to go up. So that is one thing you must know. And I think it has gone beyond 76 and is yet to break the top, though it is yet to mark up to a 1, 2, 3. I mean, a 1, 2, 3, 161.8 extension from here to down here is yet to mark up. So let's look at 15 minutes time frame. So and don't follow and don't chase this for now. That's what I'm trying to tell you. So the price is going back up bullish. Don't chase it for now. So what are you going to do? Let me bring out my drawing. Bringing out my drawing. So we are seeing this as a 1, a 2. Now at this level, this is where we expect a 161.8 extension. So we can get 161 here, we can get 2 here. So at this point, once it crosses here, then you know that yes, these are developed into the third wave proper. So all you can now do is for this to finish itself. It's going to go higher. It's going to go higher, and finish up as a 5-way structure. Now correct ABC. Then at the point of ABC, look for your 50 or 61.8, and hard to go up. So this thing is going to go further up. We're going to have many news, a lot of news in the coming week, and let's see. The news, will give little strength to dollar, then drop dollar. That is what will be happening, because we are yet to break into the third wave on the daily time frame proper. We are building the inner circles of the third wave, but we are yet to break into it. So we can see that we are breaking heights now. We are breaking heights. We've broken this, so higher highs, and we are getting lower lows. You can see from here is building, and is building. So we are breaking this. Now, once we break this top here, it's telling you that wave 3 has kicked in. So we are like, once we crossed 1,000, 1.11450, then we can say we are broken into the third wave proper. And so we'll be seeing some big moves. And all you can do is to look for pullbacks and all of that as we are going up. We still have more than 1,000 pips movement to the upside. Once we break, we need to break that. Of course, we are broken out of the triangle. We know that. And so price is steadily going up. So this will continue to build up. Let it continue to build up. If we're going to have a much bigger corrections, we will know and will decide. So that is what I can see here. Now let's look at Nzdusd USD. Nzdusd USD, see, and this is what they try to do to get you out. This is an A and this is a B. And we said that we want to build the third wave of a C to the upside. And price did this as the first wave of that third C leg, and price came back right there to break slightly below it. And anybody who is doing some trades and doing support and resistance will be thinking that what price is going to do is to go up again and break down. So price is not going to do that. Price will break down eventually, but not now. So I did an in-depth analysis on Nzdusd USD. So if you can still watch one of the video on my YouTube list, you'll see in-depth analysis on Nzdusd USD. So you can still look at it, and that will guide you to where exactly we are going to have a change of guard. So we still have very close to 1,000 pips to move before we change structure to the downside on Nzdusd USD. I'm not going to go into all of that. So we had seen this movement to the upside, and when you see this, and everybody that is reading engulfing candle, or all you want to read is that for us to have seen this daily movement, daily candle here, we are going to correct and break down. So you are afraid again that, this thing is going to fail, but what the price is doing is pushing up. And this is going to continue to push up until, it breaks here. Of course, I have some big loads around this area going up. And it's dragging seriously into some profit for me. And I continue to look at what is playing here. So now looking into the 4-hour time frame on NZD you are looking for where to add position is what we are really concerned about. We are keeping our position right from this. I have some position around this area. I had one also around this area. Yes, around this area. I have a position around this area. I have one around this area also. Yeah. So we are still trying to see where to add. Because this also corrected this move from here to here. It's a shallow movement. And if you are thinking that this is going to give us an A, maybe a flat, and this is going to give us a B and a C, this better not develop into a 5 waves. Once your B is giving you a 5-wave structure, forget it is not coming down. It is not a B. The correction is complete to the upside, to the downside, and they're going up. So this, I think, also is developing into a 5 waves. You can look at the impulsive nature and the way it's going like this. See, if you are thinking that, oh, you always have this kind of candle to give you that, oh, it's impulsive, and or it's you're trying to compare the length of the candles here with this one, you are in for it. So all you can do is to look at the internal structure of this. How is it forming? So let's go to 1 hour time frame and see if we can see anything there. So this also for me is giving me a like impulsive 5-wave structure. This is a wave 1 here, and this is a wave 2 here. This had crossed the border of a wave 3. So let's look at it. So this is a wave 1, a wave 2 here. Wave 3 is complete around this area. Price is building up higher. So with this, we are doing an extra, and it's yet to slow down to give a wave 4. So this also should continue to develop as 5-wave structure, and let it continue. If you're not in from the low, let it continue. Give a complete 5-wave structure and a 4th wave. Once you see the 4th wave, you should be able to recognize a 4th wave, and a breakdown of it, it's a correction. Then you look for opportunity to add positions and to go up. So that's all you can do. So you are not missing anything out. Don't be in a rush. Don't say, oh, you are losing anything. Don't be in a rush. So let it finish its correction. This is because this is the middle of a wave 3. And, if you just join around this area, price is going to go up, complete, you're happy, you're in profit, and it's going to come down because you don't know what you are doing. Finish that wave 4, come down low, drag you again into some negative, and because you don't know what is happening, you're afraid. So you freak out, and as you freak out in some negative, price goes up again. So let it finish itself and come down, because you don't want to hold that negative for too long also. It's not good for your psychology. Let it go off as 5 waves. If it's a 5 waves, anything that will go up in the 5 waves will give you ABC correction. That's the beauty of what we have learned about structure and wave count. So it will always give you a 5 waves and the ABC. The ABC at least can be 38 or a 50, at least a 38, in a very impulsive wave structure, it will be 38. And that's one thing you've not learned and you've not seen, so in a very impulsive structure, your 2 can be 38. Then, of course, at least modestly, we can expect a 50. And if it gives us a 61.8 or 76, it's a bonus for us. So we should always be looking out for that. Now let's go to gold. Let's go to gold. What is gold doing? Gold, I gave us an entry, was it not last week? And price has been kind to us. The only thing is that you may not be able to add another entry. I've had like some multiple entries. But of course, I wouldn't want to call a shallow entry for you. That's the thing, because you will freak out when I called a shallow entry. I've come to realize that everybody goes quiet because it's a shallow entry and you don't know what is going to happen. So you are in the middle of nowhere in a shallow entry. So, but I give an entry around this area, I think 23.83 or so, and see what price had gone. Price had been going up. When I gave this entry, I've seen this as a five-wave structure. So the confidence of a five-wave structure here means that even when this one came down and gave us a splash like this, I said price is not going to break low. It's not likely it's going to break. If you take low, it's going to go back up because this is a five-wave structure. You must know that. And so price did a 1 and a 2, a 3, a 4 around this area, a 4, and gave us a 5. So if you are thinking that this wave that you are seeing here is a fourth wave, it is not a fourth wave. It is not a fourth wave. It's a correction of this wave, a shallow correction of 38. That's what gold gave. So it went up as 1 ABC of 2 here, a 3, a 4, and it finished here, ABC of the fourth, and this is the fifth wave, and came down to give us this correction, ABC, a shallow correction at 38, and price is moving up again. So this is very bullish move to the upside. And this also is developing into 5 waves. That is one thing. So if you're going to add a position, let this one finish itself as a 5-wave structure, just like Euro dollar, Nzdusd USD, and you move with it again. Don't join like this. If there's anything you have learned, you know when not to join a trade. What do we expect from gold? Gold seems, to be correcting. Let's look at it. So we were in this correction when we add this and this and this, and some of us, we bought from here and we exited around this area before we had this structure. So this is looking like an ending structure. It's looking at like an ending structure. If this is a major fall that we've done, then we are trying to build up an ending structure. And it's so much looking like that. So in this ending structure, I don't see this as, well, of course, we always want to look at an ABC structure first, and if it breaks beyond ABC structure, then we'll take it. So we saw this movement to the upside from here. This is like a 1, and this is like a 2. Now, we are trying to build the third structure. All you can expect from the third structure in an ending structure, at least the third wave is not the smallest. So we should be thinking that gold is going to give us at least an 100 extension. What we tend to see with ending structure is we can see an 100, a 1, 2, 3, and a 138. So that is what we can expect. And if price is going to give us more, then we'll take it. And before we have a shallow fall, and anything we do, we see thereafter as a price action to the downside, gold may reverse on us. So, but these, as we are going up, we are going up with the mind of what at least we expect. So from this level to this level, come to a 2, we are seeing this probably like an inside structure of the third wave. This may be the first of the third, 1 and 2, and this is going up as probably building a nest in that regard to come down. So if we are going to have like 100 extension from here, this point to this point to this point, gold should get to at least 2,542, at least 542. So gold still has like about 320 pips to the upside to do the way it's going up. It may do more than that. So we're going to continue to follow gold as is pushing up into that wave 3. So that is what we should be looking at. But in the immediate, so if you're on this trade, right from this low, right from this point, I think where we don't want gold to break is around this area. Gold should not come, and if we are really going up, gold cannot come and take 24, 30, 32 anymore. Gold shouldn't come and take 32 anymore. So you don't want to wait. So you can put your stop loss at 24, 32. And that's what you can do, 24, 32, or just slightly below it, and while you watch this one develop into 5-wave structure and gives you correction again, and to join, to the upside until at least we'll see what gold is doing at that level of 2542 area. But it's not as if you're going to close, you're going to see the price action and the price behavior, at that level before you decide if you're going to close or not. One more thing, as a matter of fact, we don't expect price to come and take this level here, 2450. So if we are going to, because that's a new structural level that we don't expect price to take here. So, but if you put our stop loss at 2432, it's okay. That's a decent stop profit for us. But I don't expect that price is coming to break 2450 now if we indeed want to go up and finish up that to an 100 extension of wave 1, 2 to the upside to give us a 3. Now, what is building up on gold now? If we look at the 1 hour time frame, but let's go to the 15 minutes time frame, just like other ones too. On the 15 minutes time frame, so we had seen this pushed up like a wave 1 and a wave 2 here. This had gone past 161.8 extension to the upside for sure. So we are seeing this at this point. This is 161.8 plus. So price is going to knock, at 2. That's like a 200% extension around this area, and price is still trying to push up. So the best we can do for now, you don't want to join this anywhere because we are approaching the ending, of most likely ending structure. So, but all we can do is for this to probably complete 5 waves, give us a deeper correction, and that correction may walk up to around this between here and here if it's going to happen. So what we don't know, it's the extent of this third wave will matter. The third wave is still kicking higher without, I think, how can you guide your third wave? Like I've said it several times, the way you can guide your third wave is to connect your trend support from this point to this point or this point here. And as you are trying to break it to the downside, you can tell that the your third wave is losing momentum. Let me see. This is what I'm saying from here to the upside. Yeah, so this will guide your third wave because this is first and second wave. This will guide. So once you break this to the downside, it's either the fourth wave of your third wave and one more push to the upside to finish your third wave, then a much deeper correction, which will be shallower, that will tell you is wave 4, then one more leg to the upside thereafter, and a bigger pullback. So that is what we're looking for, a bigger correction. But let's this continue to go. I don't know. It technically can stall anywhere. This can stall anywhere technically. So you can't continue to go, oh, I don't know, I would have left it. It is still going up, it's still going. That is not a good way of trading. Let a structure complete itself. Look for where you are going to have your ABC to hard. That is all you can do. That's a good way of trading. Don't trade as if you are doing abracadabra like a magic. So this is the area we expect an 100 to be around 25, 43 area or 42 area, 43 area. So that's where we expect. So let me still extend this to around that area. So are we going to have a reaction around this area? Whatever it's going to give us, we will know. But this is where we expect 100 to be. And this is, if price would manage, this is 1, 2, 3 here at 25.88, and if it's going to manage a 138 here at 26,000, 15 and 16, that's a tough call. The price can do anything, or it's going to get to 26,600. But to be modest, we should be expecting what kind of reaction that we are going to get around this area first. So we need this wave 3 to finish itself and correct before we do any other thing. So don't close as if you don't understand how broccoli forms. That's what I would just advise. Don't just join in the middle of this. Now, the last one will be USD JPY. I've not been following that instrument for a while now. You can't possibly follow everything. You cannot. We have missed an entry to the downside, and if you're able to catch it, good for you. But we have missed an entry to the downside. So we missed that entry from here. You know, this is the area we've been open to, and we just did a fourth and a fifth wave, and they changed it from there. That's the manipulative nature of this. And they did an A, a B, a C. So this B here is very small. You can see the way it is. And they can do that and call this a zigzag. Now, you know, this one came down here, you know, as one, you know, A and ABC of 2 here, and they slash it to the downside. That's what the Bank of Japan, that's what they did. And now this one is going up as an X. So at the end of the day, this will be a W, X, and Y to the downside. That's what we're expecting now. So we expect at least this should correct to at least 61.8 at 152. So almost at this level of support. So about 151,900 or 15200. So that's where to probably plan your small lots to sell if you get reaction there, and it may push up a bit higher to around 70 something or 61.8. Okay, that's 61.8 to a 78 or 76 area before it falls again. So you might be able to take that trade to the downside. So at least that is what we should expect. Price had given us this, so it's giving us opportunity to get, you know, a pullback or a correction to sell again, at least equal leg of 100. So that is what I can say from here. So with that said, I wish you, would I say good luck, you know, trading next week with the news coming. All right. Bye-bye.